Hello traders, first and foremost, apologies for getting this video out late. I had planned to start getting these weekend videos out a lot earlier. Um, I did a lot of direct decorating, refurbishing my office, and that overran. When I put my PC back together again, I had problems with that, so I'm incredibly late. But from now on, I will try and get these weekend videos out a lot earlier. Right, back to the markets. Lots of bullish noises coming from other commentators, but what's really underlying in these markets? So we'll go through the indices first, and before I do that, just a note that we have non-farm payroll on Friday. It's the US jobs data on Friday. So what I'm looking for is, I think we might, that's a very hesitant topping tail bar on that weekly. What we might do is see a little bit of a roll at the first part of the weekend, and if US jobs are good, I think we'll come back and retest this resistance. What I am looking for is a symmetry with these levels here. I do fundamentally, if you look at the RSI on these charts, on the weekly chart, you can see we've got very extended here in March and May, which is typical cyclical period in the markets when we see weakness. So bear in mind we're only one more day in March, then we're straight into April. So we are beginning to see some profit taking, if nothing else, here in these markets. And RSI is tired. I mean, when you get divergent RSI, it normally means, you know, this particular move, the upside's over. And so when we hit new highs up here in back end of last year and early part of this year, we had divergent RSI. So the markets are moving up and the RSI was making lower highs. So that created a downdraft in the markets, but at the moment we are holding. So, like I said, what I think we might get is perhaps early part of the week, a retest, a little bit of a bounce, and perhaps some weakness mid part of the week. And then if non-farm payroll is good on Friday, we might get a little chirp back up here. But yeah, I'm concerned about these levels here, and I think if we touch them as we get into April and the back end of April, we might just see, at the very least, see a cyclical rollback to that support level there. And if we can't hold that, then we're coming lower. All right, but short term, I'm looking for these markets to hold up. But they are fragile. At the very least, they are fragile. There's a Nasdaq, and that is a sell signal. That is a clear sell signal. You know, out of the last 4 weeks, this is a weekly chart here on the Nasdaq. We've had 2 big red bars. The S&Ps, we are inside last week's bar. So 2 weeks back, we were nice and blue, coming off. You can see that trend line that we're coming up against. We're in this sort of funnel. And come out of this funnel and you can get some very aggressive moves. If you look at what gold has done, I believe gold's not, is gold a funnel? Yeah, to some extent, yeah. Yeah, there's the funnel. There's a trend line coming across the top, trend line coming underneath it, and we broke down quite hard. And that is potentially what we could do with the S&Ps. If we come across and can't hold this 1840 level here, I can see us coming down and retesting these 50 EMAs, which will be quite a significant drop. But the Nikkei, which I've been following very closely, is a stopping bar on 50 EMA and the bottom of the trend line, and we closed up. The DAX has had 2 solid weeks. I do appreciate that we get a reversal bar up here that we've not closed above, and I don't think we can, because I think we're one more week knocking into that trend line, and that could roll. But short term, I am bullish because the FTSE has stopping bar on this just under the fib level and closed higher. But with the FTSE, I think we are. You can see this trend line coming across the lows here, the highs here. Not closed above that fib level yet. I think this fib level is a real line in the sand. If we bump into that and fail, then I think we can drop, because this is what this fib level here typically is. You know, if you drop hard, you bounce back, and you drop, you make you know, sitting in the channel like that. This area here, if we are going to fail, that is the sell zone to me, the sell level. So any moves into 66, 75 or 70 which fail, I would look to get short the FTSE to see if that can drop back to these support levels, and ultimately the 200 EMA, that really gets going. Alright, so let's go up to the dailies now on the Dow, and that is just holding the top of that fib zone. Hammerlight bar here on Thursday, having tested the 50 EMA, just closed above there, above the 8 and 21. So that's just clinging on. The Nasdaq, it's a potential stopping bar, but every time you're under the 50 EMA, then yeah, that is potentially in a sell zone. And the S&P couldn't close above the 8.21. Closed slightly higher than Thursday, but couldn't close above the 8.21. If I take that away, and then going back and look at these levels here. So this is what a potential top looks like in, or it's certainly what it looked like in 07. Because this is the S&Ps in September and October 07. So they punched up here, looked as if they're going to hold, and then this bar here closes. We've got two big red bars here. So it just couldn't close above that level here. Dropped, pulled back to that sell zone, and then rolled over. So if we now look at where we are currently, we dropped hard into February, so we had a lower low here, crawled our way up into early March, dropped to the 50 EMA, crawled, punched up, sorry, I didn't mean to do that. We've not closed above this level here, so the fact we've not closed above here means that this is a danger point. We've pushed into this seller's bar here. That's all we've done. So if we start breaking this low tomorrow, non-farm payroll on Friday, by the way. So what we might do is get a little bit of a rise, say Monday, Tuesday, dip into Wednesday, Thursday. If non-farm payroll is good, potentially push up. But if we hit that level again and we start to get into April, bear in mind April and May is cyclically weak, back end of these months are cyclically weak, and then we could start to inch lower at that point. So so watch out for these two levels here, early part of the week. Watch out for, in fact I'll draw that on the chart. Watch out for this box here. Because I think, you know, we spent since the 17th of March, we've spent inside this box, making lower highs here, and we just look as if we're tired. Look how the RSI was divergent. Pushed up here, pulled back, low RSI, pushed up higher to divergent RSI. Okay, so that RSI there was lower than that. Okay, so market's moving up and RSI is making a lower high. That's a sign that the markets are tired. So if we close up above here at some stage during the week, any part of the week, and that is extremely bullish. But if we keep selling in the highs, that's what's happening at the moment. We're pushing up and selling, pushing up and selling. Even on Friday, we pushed up nicely and just sold. Okay, so the markets just seem tired, but they're not confirming a rollover yet. And I suspect cyclically we will see that later in the month. All right, let's move on to the other charts. The yen is very weak. That Nikkei, the yen and the Nikkei are in a good bullish market will be divergent. So the Nikkei is moving up. So the Nikkei and the yen are divergent. So as the yen is selling, we're seeing strong moves in the yen pairs. That is a buy. The US dollar yen is a buy at 102.30 area. Even the Aussie yen has had a fantastic run. It's a relatively slow mover, but it's good. And of course, the pound yen has done incredibly well. So that's a buy now at 170.30, 170.20 to see if we can come and retest 172 and possibly even higher. So we've got that trend line coming across the highs, which we'll be very, very aware of. I would go with that trend line based on the fact that was a reversal bar and created quite a strong down move. So any retest of that area there, which fails, 172, is going to create a lot of problems. We are seeing a series, although that's a decent move here, back end of the week off this trend line, we are seeing a series of lower highs. Lower, that's lower, 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 push up, and we start. This high here was lower than here, so if we can't close up here, that's extremely bullish. But fail here, and we could start coming retesting these lows and stepping down. Okay, put all that aside. Let's look at the fibs. This is the fibs on the last big move. And look at that, we're closed narrowly above the top of that sell zone. So at the very least, short term, we're bullish. So 170, 170, anything between 170 and 170.30 is buyable. And the euro yen was very similar. In fact, the markets have just opened and that's gapped up. So any pullback to 141 is a buy on that one. Let's see if this one's gapped up. That's held the highs. And it shows you how late I am in this video. I don't think I recorded a video when the markets have opened on the Sunday. That's sitting at the highs. Okay, this pound yen is getting a bounce off the support, but that's a sell. Any move into 181.30, I think it's a sell. But the euro yen is weaker. That's got very extended, so we're seeing a bounce there. But if that comes into the big 1500 or maybe even 149.70 area there, I think based on the weekly, I think that is lower. We're getting a push off the 200 daily 200, but any pullback into 150, 151 is a sell area. Okay, very quickly because I have to leave stocks till tomorrow morning, but oil is right on 50% fibs. Daily's got a bit of a reversal bar, so if you see 130 or even obviously 100, that's a buy. And gold on this weekly chart still looks lower. That's the 1200 or 1250, 1260, the possible holding area. But in the meantime, that's lower. Beans, sideways. The wheat is struggling here, as is the corn. And sugar's had a good week. So we see. Well, let's have a look at the daily on that. On the sugar, so a decent amount. Oh, I'd be interested if 1770 held on the sugar. Like I said, I'll look at stocks tomorrow morning, or at least by tomorrow lunchtime, ahead of the US Open. Of course, the US Open is now 2:30, not 1:30, because UK clocks have gone forward. Okay, so I'm bullish the dollar. Sorry, we didn't cover the pound US and the euro US. Dollar is seeing a lot of strength. That's gapped up. Pound US has gapped up. Any pullbacks to 166.20 is a potential buy on pound US. Euro that's gapped up as well. So any pullbacks to 137.50 is a potential buy. That is under the 50 EMA. It's a potential reversal bar, or at least a hesitant doji. But I would look to get short the 138, because I think if you look at the dollar pairs, there's US dollar Swissy. Decent move into resistance, but I think that's a potential reversal bar on Friday. Got some positive data due out in CAD early part of the week, so we might see a push up into 131.30 and then a return. Then at which point all pullbacks will get bought. Let's leave the CAD. I mean, it's a potential wedge. If this 110 holds, we start closing above 111, that could climb higher. Okay, but I think in the early part of the week, I think the markets are just clinging on, but we are very extended. Okay, that's my overall message. I think we'll see some. I think the markets will hold up early part of the month, but potentially sell into the second, or at least into May. Okay, hope that helps, and I will see you tomorrow in the Traders Roundtable.